Good morning, everyone. David Paul speaking. I'm the Managing Director of VectorVest in the UK. And this morning, I want to talk about the technical position of both the UK and the US markets, and then look at an opportunity for traders in the gold market. So that's the VectorVest composite of the UK, and that's a composite indicator of all of the shares that we follow on the London stock market and on AIM. The green and the red signals represent our most conservative market timing system known as confirmed calls. And you can see the signal long last October, the red triangle just before the big collapse in February and March, and the signal currently long since April the 27th. Last time I was on Core Finance, I spoke about our worry-free plan, and our worry-free investing plan is up 21% in that period. So, that's invested in the UK's safest shares, and those positions haven't really changed since April. So I'm quite happy with that. That's the American market, folks. In the American market, you can see a similar situation. The American market took a longer to actually print a bottom. That bottom occurred halfway through May. And the American market, the longest term measure of the trend on VectorVest is down. And in fact, only the short term trend is up. So I've been advising all our customers only the most aggressive should be building positions in this market in the US until it in fact prints a longer term buy signal. I think if the S&P can close up around 3, 4, or 10, that signal will be in place. So the S&P still got a little bit of work to do to actually move to a buy signal apart from the most aggressive traders. I've taken a couple of positions I couldn't resist. These are spread bets. This is AMD. And that's the chart of AMD. It's been very, very kind to me this year. Down below the price chart is earnings per share, which is rising linearly over the last year. And that's the engine that's driving the share price up. Those of you that are technicians should probably see how the market pulled back and what technicians refer to as a falling wedge, which has been a pattern that's been very kind to me over the years. And when the short-term trend of the American market turned up a couple of days ago, I bought into that, and the position's going okay. I see the American market's a bit softer this morning, so I would expect a little bit of a pullback before it gets going again, even under the most bullish circumstances. The other position that I couldn't resist was Target. Target, the trend fairly strong. Just recently, earnings per share, that blue line study below the price, has been upgraded significantly, and that in fact caused that gap. The share is traded what technicians refer to as a cup and handle pattern, and it's just in fact broken out of that the other day. And based on that pattern, based on the earnings per share rise and the other VectorVest metrics, I couldn't resist taking a small position in that. Those are the only two positions that I've taken in the stock market so far. It's very early days in terms of this turn. I'm still advising our VectorVest customers, those of you that are trading medium-term signals, to wait for more confirmation from the market, and I think that will come if the S&P closes above 3, 4, 10 odd. I think there's an opportunity in gold, and gold has pulled back and clipped and gone below that obvious low where all of the stop losses would be lying. I have a little model on commodity stocks where I look at an 8-day stochastic and a 40-day stochastic. Gives me two measures of the trend. Stochastic is a momentum indicator made famous by an old friend of mine called George Lane. And as you can see, both stochastics, the short term and the long term, are both in the buy area, and that bodes very well. We had two fairly inconclusive days. Technicians refer to those as dojis, and then we had a nice upswing, and a nice upswing yesterday. I'm sure it's a little softer this morning, but I think that Gold at these levels is a low risk opportunity for a push to the highs, and with a fair win could easily get to 2200 from here with a fair win. The only thing I can guarantee is it won't happen in a straight line. There'll be a lot of volatility over the next 6 weeks. So what should we buy? Well, I've taken one position so far, which is in the American GDX. And that is a exchange traded fund of major gold miners, and that share pulled back to the last old top, and then it charted a fairly positive candle pattern, and it gapped down and then it reversed, and that's what candle analysts refer to as a piercing line candle pattern, and I couldn't resist a position in it after that. So I have 3 positions running, short-term spread bets, 2 stocks, and the GDX. On the stock market itself, I think polymetal is setting up for a good buying opportunity. As you can see, the green line is our VectorVest valuation. So we believe this share is significantly undervalued by the market, and the blue line showing that beautiful rise in earnings per share. So if the gold market can maintain that low and confirm that low, then I think there is little risk in buying into polymetal at these levels. Nevertheless, these are gold shares and they have a temper on them. And a smaller gold stock, TSG, has pulled back pulled back in 3 waves. It's pulled back to a fairly important previous resistance stroke support level, and has had 3 very solid days. Significantly undervalued on VectorVest, and as you can see, the earnings per share plot moving up. So that's a couple of special opportunities for traders, people who can manage risk proactively. Put a stop loss into place, and very importantly, emotionally react on that stop loss. I hope you found this helps. Thanks very much indeed.